Islamic finance history can be divided into three major periods and structured as follows. The early era of Islam, 622 to 1850, Abbasid age. Theoretical background, 1850 to 1960. The age of colonialism, the modern period, 1960 to 1975. Initiating phase, 1975 to 1985. Establishing phase, 1985 up to the present. Development phase. One. The early era of Islam. Islamic banking practices took place at the early age of Islam. In fact, one of the most famous examples had manifested in Abbasid dynasty, precisely in Basra, Iraq, which has been called the Wall Street of that time by Sarafiya or money changers, and Jahabiza, translated as group of bankers, were performing that type of banking through Diwan al-Jahabiz institution ruled by the state. 2. Theoretical background. At the first half of the 20th century, almost the entire world of Islam was colonized by the West. As the national consciousness grew and freedom movements promised to bear fruits during the second half of the last century, they urged to manage their affairs in accordance with their own Sharia values and traditions. As a result, many Muslim intellectuals and thinkers started writing the theoretical background of an Islamic financial system, such as Mr. Isa Abdo, Mr. Muhammad Baker Asadar, Mr. Muhammad Najad Allah Siddiqui, Mr. Ahmad Abdel Aziz Anajar, etc. 3. The modern period. In practice, the early initiatives took place in Egypt in 1963, with Ghamer, which was similar to a retail bank, but it did not continue. In parallel, Tabung Haji in Malaysia, which is an investment endowment, still continues. From 1975 to 1985, Islamic Development Bank in 1975, Dubai Islamic Bank at the same year by Sheikh Ahmad Luta, Faisal Islamic Bank in 1977 by Muhammad Al-Faisal bin Abdulaziz. By 1985, 27 more banks were established in the same manner in the Gulf countries, Egypt, Sudan, and many others. By 1985, over 50 conventional banks, some of them located at money centers like London, were offering Islamic financial products, followed up by some of the major conventional banks establishing Islamic windows and branches such as City Islamic in Bahrain and Grindlays in Karachi. From 1985 up to the present. In the 90s, Islamic banking started operating in Europe, mainly with the Islamic Bank of Denmark and Al-Barakah, London. In addition, a number of Islamic mutual funds appeared, such as Investment House in Kuwait in 1994, Abu Dhabi Islamic Bank in 1997, Muamalat Malaysia in 1999, Sharia Mandiri Indonesia in 1999. By the year 2000, there were more than 200 Islamic financial institutions with over $8 billion in capital, over $100 billion deposits, managing assets worth more than $160 billion. Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, was established in 1991. Then, Islamic Financial Services Board, IFSB, was established in Malaysia in 2002. After the events of 9/11, the West condemned the Islamic finance system of partly funding terrorism. However, this era witnessed a great increase in Islamic finance customers and clients, in addition to the establishment of so many Islamic windows in the traditional banks, in addition to the access of big companies to the Islamic finance and the emergence of sukuk. Today, Islamic banking is growing at a rate of 15 to 20% per year, with signs of consistent future growth, with more than 300 institutions spread over 55 countries. In fact, according to CIMB Group Holding, Islamic finance is the fastest growing segment of the global financial system, and sales of Islamic bonds may rise by 24% to $25 billion in 2010. Because of all this, Islamic finance makes sense. It has proved itself as the only cure of the global sick economy, as the Vatican declared the principles of Islamic finance may represent a possible cure for ailing markets.